Welcome back to Lunch of the Market for Thursday, September 16th. We've been telling you to sell, sell, sell recently. Hopefully you are looking at a pile of cash, as we certainly are. And after a week of telling you to take some off, you're looking at all that cash and wondering, now what do I do? After a hiatus for some time, we now have some ideas for you. Sorry that we had to throw a wet blanket on your urge to hit the buy button yesterday, but that's part of being a disciplined investor. Okay, so now that we've told you, we have you cooled off, we're going to direct your attention to what has been working in this market, collecting dividends. That's right, knowing that you're going to get paid anyway, even though your stock is going down, does two things for you. One, dividend yield puts a floor under your stock. When the dividend yield gets outsized, say over 4%, the stock begins to attract all sorts of longer-term investors that are interested in collecting that dividend. This natural buyer helps buoy the stock price when the overall market is going down. Number two, if you just wait long enough, the company continues to be successful, and then you'll earn back any losses through dividends. As long as the company keeps paying that dividend, you'll be up on your investment, period. When you look at time frames in terms of years and decades, dividends have created more wealth than nearly any other means of investments. Say buying a company like Apple at $10 and selling it at $2.70. So now that we've convinced you that collecting dividends is a great way to accumulate wealth, what names should you own? You already know about our consistent favorite, Total, the French integrated oil company, but we have two new ones for you today. First, SPIL. We'll just call it SPIL. That's the ticker symbol for Siliconware Precision Industries Company. These guys provide semiconductor packaging and testing services worldwide. Their services are used by those who manufacture mobile phones, digital cameras, cable modems, LCD monitors, internet appliances, and personal computers. Being that those are pretty much the must-own electronics these days, their services certainly fill a need. Next, valuation for SPIL is terrific. It trades with a 9.9 PE, and you know less than 10 is our magic number. The company has revenues of over $2 billion with $664 million in cash and only $1.4 million in debt. The company has free cash flow of close to $340 million a year and $1.06 per share in cash. The stock price is at $4.91, so backing out the cash would give the stock a P of 7.7. The dividend, and here's the kicker, is 30 cents or 6.2%. They have a dividend covered 3.5 times, so it appears to be quite safe. Check out SPIL, only about 40 cents away from its 52-week low and $3 below its 52-week high. Risk reward is extremely favorable. The next name, Elbit Systems Limited, ticker ESLT, is an Israeli company that designs, manufactures, and integrates defense systems worldwide. They do aerospace, land and naval command centers, communications, computers intelligence, surveillance, reconnaissance, unmanned aircraft, and on and on. If it's technological defense or warfare, these guys are in it. They've been around since 1966, and they pay a 2.3% dividend, trade with a PE of 10.7 and a PEG of 1.1. They have $367 million in cash, which comes out to around $8.62 per share. Their debt is slightly more than the $493 million, so it's just over the 1-to-1 debt to cash. They generate $40 million in free cash flow, and the stock is only $3 away from its 52-week low and about $20 from the highs. So again, the risk reward is favorable. Take a look at these two new names, SPIL and ESLT. We hope you have plenty of cash these days, and it's been a good week for you. CRE is above that $50 level again today, so we're happy to have rolled the contracts out when it seemed like things were at their worst. Options expiration is tomorrow, and we'll be looking to defend our positions into the close for another good expiration. So far, Goldman Sachs is staying right in the middle of our range, just the way we like it, and we have on what I believe is an iron condor. For more information on what an iron condor is, take a look at its Wikipedia article. They do a great job with it. That's where you short a put spread and a call spread and expect the stock to trade in a range in between. Thanks for tuning in again today, and we'll see you tomorrow.